We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back up to business. Okay, guys, the pair we'll be working on today is EUR AUD. That's the euro dollar versus the Australian dollar. Forex 101, we'll be working on figuring out where is market structure. Number 2, identifying the overall trend in the market. Number 3, identifying SR lines in the market. Number 4, identifying patterns for entry. Let's grab our red brush. So in this area here, we're going to start from the beginning. Market started off in May of 93 and it went straight into a push down. The market pushed down right on top of this support line right here that we just created. From there, the market pushed right back up to retest previous areas of resistance. The market retests previous areas of resistance to push right back down to the support, and the market pushed right back up to push right back down to retest previous areas of support to push up again. This time it broke through our resistance. It wasn't able to push up higher, so the market pushed right back down. The market came back for a second time to see if we can retest. It actually did retest the resistance right here to try to see if a breakthrough, but the market wasn't strong enough to break through. The market dropped straight back down to previous areas of support. From there, the market tried to push back up. It wasn't a full push. Market broke right back down into the support. Broke through the support, created new areas of lower lows. I see a pattern here, so I'm going to describe this pattern. I'm going to backspace this so we can get this right. So what I see in the market here is a pattern just formed, and the pattern is a W. So we do know when we see a W, what happens when we see a W, or most of the time what happens when you see a W, the market is going to push up. So when the market did do that push down, after it broke the support, this is the first leg, this is the second, this is the third leg, and then we have to push up, broke through our resistance. And once we have that push up and we see that formation of the W, we're looking for a retest, and the market pushed right up and it breaks through previous areas of resistance. Once it broke previous area of resistance, it created new levels of higher highs from the previous time. The market wasn't able to hold, so it broke down. It retested previous areas of resistance, retested something in here, and it just broke straight down back to our previous areas of support. So it broke through one support and then we're headed to our other support. From there, the market kind of just bounced up and down in this on the support, up and down through the support line until it really created enough momentum to push up back to our resistance, to push back down to our support. So basically the market is in a range. So if you can see this, so higher highs, this area here will be higher highs, this area will be lower lows, and this will be like the range area. So it will just be bouncing up and down. And so we know if this is higher highs and this is lower lows, if it reaches higher highs, eventually it's going to come back to lower lows, which we kind of see it did here. So once it hits here, it's probably going to go back up, but it didn't break through our resistance, so it just consolidated. Okay? So we see that consolidation area going on here. We can bring this line across so we can see how much it's consolidating. So once we got here, so something happened here. It looked like I see a pattern. So I'll demonstrate what I see. So it's the first leg of the W. It pushes up, came back down, pushes up again, retests previous areas of support, and then we had that W formation fully formed and then pushed up, broke through resistance. And then if you look at here, the market is basically just returned to previous areas of high highs just like it did years ago. The market wasn't able to break up further, so the market lost momentum. It just dropped. It dropped, broke through our resistance. It broke through our second resistance, and if you can see here, it broke through our lower lows resistance. Okay. So once it broke the lower lows resistance, it headed all the way down to, and it created new areas of lower lows. So this is the lowest the market has ever been, and this is August 2012. So this is the area of support that it hit. It came up out of it, came back to retest previous areas of support, and then it pushed right back up, broke through our resistance, retest our resistance to break up into our resistance. I see a pattern, so I'm going to break it down. There's a W right here. Most of the time, like I said, when we see a W, we know the market it may go up. Sometimes it don't. And this is the definition of the market did a W pattern, but it never broke up. And I'm going to show you what is that. So this is the first leg of the W. It broke through our support. Second leg of the W. Third leg of the W. And then we have that fourth leg of the W. And then once we get that fourth leg of the W, there's always a retest happening. It's going to happen. So the retest actually happened on the same areas of the support. And then the market wasn't able to push up like it wanted to. So we just had a straight back. The market just dropped straight back down. The market dropped straight back down, broke through our support. It wasn't able to break down further, so the market gained momentum and it just pushed right back up. Once the market pushed back up, we see a antenna here. So there's something going on in the market. So we have to see what's going on. Let's identify it and a few. So I'm going to clear my screen. Okay, guys, that's market structure. We can see how price has been acting for the past few years. And then right here, we got a push up, a tenor to the top, and we got to see where the market's going. So I'm familiar with the market. So when you start seeing these antennas, that means the market may try to turn around. So something's going on in this area and his area. So these are major areas here. It's getting all wicky here. That means when you see these long wicks. These long wicks means that the market was pushed up this high. It wasn't able to hold, and it closed out somewhere here. And then another candle form. It created that that engulfing pattern. It overlapped the previous one, and the market looked like it's headed down. So number two, we will be looking for the overall trend. So the area we're going to look for our overall trend at, first thing we're going to do is highlight this section right here. So is this the area that we're working with? We're going to grab our trend line, and we are in a downtrend. The market pushed up all the way back to the top. Wasn't able to hold, so it pushed back down. So we're going to create our downtrend here. So we're looking for price to return back to previous lows in this area here. If it doesn't, it'll probably ping off of one of these areas here and shoot back up. But we won't know until we go down the time frame to see what's going on in the market. Okay, Forex 101, number two, we'll be working on, number three, we'll be working on SR lines. So we're going to figure out what's going on in the market with the SR lines. Okay, so looking for our SR lines, we will look for price action, which will be the last active candle or non-active candle if it was the weekend. So it's a weekday, so the market's about to be closing in about less than 30 minutes. So what we do is we look for price action and we say, okay, we know it's a downtrend. So the next area of a down will be somewhere here. So the market's trying to return back to this area here. So you can set our horizontal ray We're going to go back to price action. And once we find price action, we're going to go to opposite end and say, okay, if the market reverses from this downtrend and go up, it's going to try to lead it back up to this peak right here. So this area here is where price is at, and if you see, it's trying to break through these peaks and these wicks right here. Okay, so we're going to drop a horizontal ray right here, and we can see that if the market breaks this blue line, it's going to go down further. If it doesn't break the line, it's going to turn around and go up. We're going to head down our time frame. We're going to still identify SR lines on a lower time frame. Okay, we're looking at the market. We can see that the candles are respecting the trend line. It came down, it came back to our trend line, it came down a little further, next SR line. Now we got to figure out what the market's doing. On this time frame right here, we're going to create our SR lines. We're going to create our SR lines in between the blue lines, and we're going to change the color to green. It'll give you an idea when the candles are breaking through the SR lines, what time frame it is on. So here, we're going to change this to green. We have a peak there. We have a peak here. A few peaks here. There's more here. We may have one more area of a peak here. Something's going on here. That looks perfect. Okay, so that will be our SR lines on the lower time frame. Let's take a closer look and see what's going on in this area on this time frame. Okay, so if we look at the market, let's see what's going on. So the market, something's going on in this area. So this is the weekly time frame. The market is pushed down. It consolidated here. It came back to retest the resistance line on the higher time frame. It also respected our trend line, and we got that drop. And then here go a pattern right here. This is a engulfing pattern. So if this green closes out above this red, that means the market's going to go up. But because it's an overall downtrend, we would not take it for the buy unless it breaks our trend line and you can see like, okay, you know what, this is really going up. For right now, we can just wait for the market to see if it's going to turn around to respect our trend line, because it can still lead up to here. If it breaks this point here, there's a chance it can be headed all the way up. If not, it can head. This green candle can head up to maybe right in this area, and it can turn around and kind of consolidate and work its way down and respect our trend line. I'm going to head down a time frame to see if we see any patterns for entry. So the only thing I don't see a pattern. The only thing I caught right here was this engulfing pattern. So this green candle engulfed this red one. It closed out. So like I said, when I seen it on the weekly, you can see that, okay, if it closed out, the market's going to go up. That's exactly what it did. The market is going up to return to previous areas of resistance. It broke the blue resistance line. Now it's headed to the green. Now, when it gets to this green, if it breaks through, if it breaks through this green, it can head up to this area, and that would be close to our red trend line. If it doesn't break this area or the trend line, it's just going to come up to here, and it's going to come right back down. So even though we can see that it's a sell, and the market is engulfed and it's showing that it's going to go up, we're not going to take it for that. We're going to let it ride up, and we're going to catch that pattern. And if you want to know how to look for patterns, go to Google, type in Forex pattern cheat sheets, and study. Just study the patterns. You don't have to study the names of them. Just study what you see. If you want to study the names of them, do what you do. So the market, we look for the market to push up close to our trend line, this area here, for it to push back down. And then once we see that pattern that happens here, for the market to take the sell and go back down, let's go check and see how far we would take it to. So this is price action. We know price actions head up to this green line. Once we catch the move and it turns back around, it can happen somewhere here or here. But let's say it happens here. We can see that turnaround right away. We'll find entry here. We'll take it to our next SR line, which will give us 215 pips. And if the market goes back, it can go back to about, let's go down to our time frame and tighten up our SR line. So if the market goes back, it's going to try to return to areas of, let's say, about right here. So that would give us a total of 215 pips on the way down, which is an amazing move. If the market turns back against us, it will give us 53 pips low. So that's an amazing trade for EUR AUD. That move can be coming up sometime soon. It's the weekend coming, everyone. So 5 p.m. the Forex market will be closed, and we can look back on Sunday when the market opened at 5 p.m. to see if the market is going to turn around. Like I'm saying, it may do. In this case, we see the pattern, and it will take it for that trade. If not, we'll just have to wait to see what the market do. At the end of the day, everyone, please be patient with the market. Don't rush the market. Just pay attention to the market. Observe the market. The market is going to do what it do. If you do not see anything you don't recognize, do not take the trade. There's no rush in the market. The market is always going to give us what we want. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching. Thank you for your attention.